Hi, in this module, we're going to go over a demonstration problem for depreciation. So, what is the depreciation method? And more importantly, how do we deal with depreciation, with different methods of depreciation? And what are the entries? What are the entries for accumulated depreciation? What is net book value of an asset? And how do you put the depreciation expense, income statement, accumulated depreciation on the balance sheet? Those are the questions that we're looking to answer in this presentation, okay? And what I want to do first is introduce this problem. So we have Milico Inc. acquired a machine that cost 1.2 million in 2006. The machine has fixed the last 8 years, so that's useful life, and then it's worth 180 at the end. So we're going to look at the straight line, we're going to use it the double declining, and we're going to look at the book value in the 8th year right before it's disposed of. Okay, so with straight line, we look at what is the base that we depreciate, and that's cost minus salvage value, right? So that's going to be the annual depreciation expense is the amount to be depreciated divided by the useful life, right? So our depreciation expense here, 1.2 million minus 180,000 divided by 8. Why does that make sense? Think about it. You have 1.2 million, it's going to eventually be useless, right? Except no, in this situation, even when it doesn't work, it's worth 180 because you can sell the scrap. So what is the base that goes away? That's the base, the amount that depreciates. It's literally what value will disappear. We have 1.2 million minus 180. And how much the value disappear a year? It's this amount divided by 8 because it disappears evenly over the 8 years. So we have 127,500 per year. What's the entry for this? Every year, debit depreciation expense, credit accumulated depreciation, debit accumulated. So accumulated depreciation shows up on a balance sheet as a contra asset. Depreciation expense shows up on the income statement as a periodic expense, meaning that it will be on your profit and loss. So this is a big piece to think about, especially thinking retail, thinking apparel. This is the big piece, actually, where you're thinking about moving to e-commerce. What's the big thing that's going to disappear? Is this depreciation expense. Why? Because this is what destroys your profitability, right? Because when you start buying huge spaces, when you start paying big rents, you have big leases, ultimately this is what the retail cost that e-commerce eliminates. um, so think about it in terms of, is it material in the fashion beauty industry? Is this a large number compared to the other ones? Very worth looking into balance sheets and income statements to see how big this number gets. I guarantee you that it's pretty big. After 5 years, what is the accumulated depreciation? The annual times 5, 637.5. And now we use double declining. Oftentimes, double declining can be used, for example, for tax purposes. So you can expense property, plant, and equipment at a higher rate. And what is that rate? Double the straight line. So double declining, double the straight line. So you essentially look, what's the rate of the straight line? It's 12.5%. So what's the rate of the double declining? Double, 25%. So it's 300,000, then net book value. So you actually take the book value times the depreciation rate. So 900,000 times 25%, 225. Subtract that again. Your net book value is 675. What is the next one? 675 times 0.25, 168.5. That's your accumulated, and that's the remaining. Okay, so now, let's see. Now it ends because net book value at year end equals the cost of the asset minus accumulated depreciation. So basically it's the net book value. So essentially it's lower now than the net book value at year end, right? Is below its salvage value in a way, that minus the accumulated. So you stop here because you've already depreciated it enough. Now the question, it says, what will be the net book value of the machine at its end of its 8th year? under each depreciation method. So let's look after 8 years of the 180. So it's as 180, straight line literally goes to that, and double decline is not applicable. So that's our example for this week for depreciation. Please go through it a couple times and practice the problems.